Hey everyone, welcome back to Corporate Decoder, the place where we unpack complex financial documents into plain English. Today we are looking at the PIMCO California Municipal Income Fund and their latest 8K filing. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. This filing is a current report for the PIMCO California Municipal Income Fund. Think of it like a special news bulletin for investors. The report itself is dated the 19th of September 2025, and it tells us about an important decision made on the 17th of September of the same year. This is a fund that focuses on municipal bonds, which are basically debts issued by states and local governments. The fund is incorporated in Massachusetts. Here we have the fund's commission file number, sort of like a social security number for this specific financial entity. And this is the fund's employer identification number for tax purposes. This part tells us that the fund's common shares are traded on the New York Stock Exchange under the ticker symbol PCQ. So if you're thinking of investing, that is how you'd find it. Now, here is the main news from this filing. Under other events. The big news is that the Fund S Board approved a change to their investing rules. They are reducing the minimum amount of money the fund must invest in California municipal bonds. Previously, they had to put at least 90% of their assets into these specific bonds. That number is now going down to 80%. So, starting the 20th of October 2025, the fund will aim to invest at least 80% of its net assets in municipal bonds that are exempt from California income taxes. This means the income you get from these bonds won't be taxed by California. PIMCO, the company managing the fund, will decide if the tax-exempt status is reliable. Investing less in these specific California bonds might mean the fund has more flexibility to invest in other types of bonds or assets. It is important to note that this change is to a non-fundamental guideline. They still have a fundamental policy that requires them to invest at least 80% of their assets in things that are tax-exempt from both federal and California state income taxes. So, while they are lowering the specific California municipal bond requirement, they are still committed to a broad strategy of tax-exempt investments at a higher level. This could allow them to diversify their holdings even more. You won't see this change reflected in official reports until the end of 2025, specifically in their annual report for the period ending on the 31st of December of that year. This is standard legal language to show that the report has been officially authorized and signed by someone responsible at the fund. This simply confirms the name of the entity making the filing. This is the signature of Ryan G. Leshaw. This confirms the name of the individual who signed, and this tells us his role within the fund's organization, showing he holds a significant legal and administrative position. And finally, the date the report was signed. Now, looking at this filing, the key takeaway is a slight flexibility adjustment in the PIMCO California Municipal Income Fund S investment strategy. They are dialing back the minimum required investment in California municipal bonds from 90 to 80%. This is a drastic shift, but it does signal a subtle move towards potentially broader diversification. From a Warren Buffett perspective, we always look for management that clearly understands its business and makes strategic adjustments. This change suggests the fund, S management, PIMCO, sees an opportunity or perhaps a need to adjust its focus. While the filing doesn't include detailed financial statements like a balance sheet or income statement, the information provided points to a proactive management style. The fund is adjusting its non-fundamental guidelines, which are more flexible than fundamental ones. This gives them room to maneuver in the market without needing to notify shareholders of every minor tweak. The reduction from 90 to 80% in California municipal bonds could mean a couple of things. They might be seeing better investment opportunities elsewhere, or they might be looking to reduce exposure to a specific sector if they perceive any risks associated with California's municipal debt market, though no risks are explicitly mentioned here. The important thing for investors to remember is that the fund is still committed to its core strategy of investing in tax-exempt income. The overall 80% minimum for federal and California tax-exempt investments remains. This haircut on the California-specific portion just means they have a bit more freedom. It's a small operational adjustment, and its real impact will depend on how PIMCO chooses to reallocate that 10% of net assets. Will it go into other municipal bonds from different states, or perhaps into other types of income, generating assets? That is the story waiting to unfold in future reports. We will be watching closely to see where PIMCO decides to deploy that capital. So, a minor but notable shift in investment strategy from the PIMCO California Municipal Income Fund. What is your take on this adjustment? Does it signal more flexibility or potential risk? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button, it really helps us out. And don't forget to subscribe so you don't miss our future corporate dives. Also, join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next video.